What's going on, you guys? My name is Zach Hartley, and in this video we are going to walk through two different ETF portfolio strategies that you can use to make more money. Here is everything you need to know. Let's go. Okay, so first things first, an ETF stands for Exchange Traded Fund, and they're a basket of stocks that trade like a single stock. You can buy and sell them when the market is open, and when you buy and sell them, you're basically buying and selling ownership in a basket or a group of different companies, depending on which ETF you buy or sell. The advantage of ETFs is that they give you instant diversification with very low fees. Most of the time, these ETFs track a specific index or they are benchmarked to a specific index, and all of these ETFs trade on an exchange either in Canada or the USA. So if you live in Canada, you need to make sure that you are trading an ETF that is traded in Canada, vice versa with the USA. I'm going to walk through some examples of both in this video. Now, the two strategies that we are going to walk through here are number one, a growth strategy, and number two, a cash flow strategy. And the growth strategy here, the focus is going to be on keeping our money invested in the market. We are not trying to pull it out. We are not looking for cash flow. We are looking to see the value of that portfolio increase over time. We are looking for appreciation, and therefore we are not looking for companies that pay dividends or distributions. It may happen, there may be some good companies that happen to pay small dividends, but it is not the focus of this portfolio and of this strategy. And so some options for ETFs that we could look at are some broad market ETFs. These are going to be ETFs that track specific indices such as the S&P 500, the NASDAQ, or the Dow Jones. If you're looking for a Canadian one that tracks the S&P 500, you can look at VFV and vice versa. This is an American ETF, QQQ, that tracks the NASDAQ exchange. The NASDAQ exchange is very heavily weighted in the tech industry, whereas the S&P 500 is a larger, more broad representation of the entire US market. So if you are looking to get into a growth portfolio using ETFs, one of these two basically ETFs is probably, or something similar to one of these two ETFs, should probably be the core fundamental position of that portfolio. And once you've established that kind of core position, that's when I would start looking at industry specific ETFs. So if you are sitting there and you think that electric vehicles are going to skyrocket, or renewable energy is the future, or cybersecurity is going to explode over the next few years, that is when you can start to buy an industry-specific ETF. What I mean by this is an ETF that tracks a specific industry such as clean energy or cloud computing. Here are two examples of different industries that have a specific ETF. And so when you buy or sell CLOU, you're going to be buying or selling a group and a basket of different stocks, all focused on cloud computing. And so if I were building a growth portfolio, I would choose either the NASDAQ or the S&P 500 as my core position. And then if I was really interested and I wanted to get more involved, that's when I would start to choose industry specific ETFs. For me, I'm really heavily invested in cloud computing, clean energy, cybersecurity, cryptocurrency. Like I think there's a huge opportunity in those industries. So that's probably where I would be going to first. Now, the second strategy here is the cash flow strategy. And the idea here is that we are looking to get a steady cash flow from our investments. Maybe we're in retirement, or we want to use that money to reinvest it somewhere else, into real estate, for instance. And we just want to get some of that money out of that investment on a yearly or quarterly basis so that we have that freedom and we can do whatever we want with it. Now, with this type of strategy, we are going to be looking for a safe investment, one that is going to be steady, one that is going to be consistent, and we want it to give us a good yield, meaning we want it to give us a good return on our investment in the form of that cash flow. And ideally, we want that to go up over time, meaning that we want it to provide more cash flow as time goes on. So for this strategy, we're going to be largely focused onto companies and ETFs that are going to pay us a dividend. And so as a couple of examples of this, we have, again, a broad market ETF as well as an industry specific ETF. I would go with the same strategy. Choose one or two of the broad market ETFs and make that the core largest holding in your portfolio. And then if you're feeling more adventurous and you want to feel more in control of your portfolio and like you're making more decisions, that's when I would start to choose different industries. Now, just as a Canadian example here, if you type in XDIV, this is going to be a Canadian ETF that's highly focused on dividend paying companies. Same thing with SPYD in the USA. These are going to be broad market indices, meaning they have companies from a variety of different industries, all focused on dividends in one single security, SPYD, or XDIV, just depending on what country you live in. The other option here is the industry-specific ETFs, and I've highlighted one from the Canadian energy industry as well as one from the American utilities industry. You are going to notice that most of the stocks and most of the holdings in this type of portfolio and this type of ETF are going to be the very steady, long-term, consistent stocks. You're not going to find any tech startups in here. You're not going to find any high-growth companies that are losing money. These are all going to be dividend-paying companies, like utility companies, like energy companies, like transport companies, like pipeline companies, like CPG companies, like consumer staples companies. It's going to be those type of companies because those type of companies pay dividends. Now, when it comes to your weighting in your portfolio and which ones you choose, honestly, all of the options that I've shown you here are extremely safe bets. None of them are high risk at all. So you've got a lot of control and you got a lot of flexibility here. And me personally, I would make sure that my largest position is probably going to be in one of those broad market ETFs. That's going to give you instant diversification to the entire market, and it's going to give you a nice, really steady, consistent return, at least over the long term. After that, and once you have a little bit of confidence and you're feeling comfortable and you want to do a little bit of research, that's when I would start trying to figure out which industry is going to see the highest growth rate or going to have the most success over the next few years. And if you can start to figure out, that's when you can start to choose industry-specific ETFs. But you also need to make sure that if you are looking for a cash flow portfolio, you are never going to be able to find some type of new technology ETF that is going to fit in that portfolio because it's not going to give you cash flow. So if you are looking for a cash flow ETF, you might want to look at energy versus consumer staples versus something else that is going to utilities that is going to pay a consistent dividend, and then figure out which one of those industries is going to do best over time. Now, the next question here is how do you actually buy these ETFs? And if you live in Canada, I personally use Questrade. The only downside to Questrade is that they do charge commissions, but they do give you a whole lot more control over your trades, your executions, and your portfolio. This is what I use, and there's a link down below that will give you $50 in free commissions if you sign up. If you don't want to pay commissions though, that's when I would recommend Wealthsimple, and there's a link down below that will give you some free stocks when you sign up with that link. Both of these are great options if you live in Canada. If you live in the US, I would recommend Webull or Thinkorswim. Now, if you want to learn more about investing in general and how to build a portfolio and evaluate these different ETFs and stocks, then definitely consider checking out my Skillshare course. It is called Stock Market Fundamentals, and there's over 10 hours of content on there that will walk you through everything you need to know to get started in the market. There's over 11,000 students that have gone through the course. There's almost 400 reviews on the course. It is extremely good, and I promise you it'll be well worth your time. You get 2 weeks or 1 month completely free when you use the link down below, and then it's up to you with regards to whether or not you want to keep the subscription. It's pretty much like the Netflix but of courses, so you get access to everything and you can kind of pick and choose whatever you want. I personally think it's well worth it. Try it out for yourself. It's completely free. You can take my entire course and cancel your subscription. It won't cost you anything. And if you get any value out of this video, please remember to click that like and subscribe button. I sincerely appreciate it, and we'll see you guys in the next one. Good luck trading, good luck investing, and we'll talk to you soon.